This is the Chappell Real Estate Show, episode number 37.
Welcome to the Chappell Real Estate Show, your source for the latest real estate information so you can buy, sell, and invest with the best in Texas. Whether you're a first-time buyer, a current homeowner, or a seasoned investor, you've come to the right place. We're here to simplify all things real estate so you can achieve your goals of property ownership with your hosts, Daniel and Roger Chappell.
What's up, listeners, and thank you guys for tuning into the Chappell Real Estate Show, your source for the latest real estate information so that you can learn how to buy, sell, and invest with the best. I'm your host, Daniel Chappell, and actually today I'm joined here in person by Dad, my co-host Roger Chappell. How's it going today, Dad?
You're going great. How are you guys doing today?
Oh man, today's another great day. We've got some beautiful weather. Things are cooling down here in Texas. We're starting to see some cold weather in the morning and that nice 70 degrees cool weather in the afternoon. It's great.
Yeah, it's awesome.
My favorite time of year. Saw a couple cardinals playing outside, some squirrels running on the fence. So we got a little bit of scenery here at the house today.
Yeah, it's great.
So today we're going to be bringing a third quarter housing update for you guys. So there's been a lot of questions about whether or not there's a bubble in the housing market. We all saw how much prices just absolutely skyrocketed in the early part of the year. So it begs the question: what's the future outlook look like? What are we expecting here in the future as we move towards into next year and the fourth quarter and things like that? So we're going to talk about some buyer expectations, some seller expectations. We're going to talk about some statistics as they compare to sales last year, and then also how they compare month over month, so we can get kind of a short-term outlook of what's going on in the housing market. And we're going to touch on some of the other neighborhoods and counties that are in the Austin area. As we all know, Austin Round Rock MSA is a very large area. We've got Hayes County, Bastrop County, Williamson, Caldwell. There's a lot of different areas. So we're going to touch on a few of those different areas for you guys today so that you can kind of understand a little bit more locally what it means for some of these different neighborhoods around the Austin area. So all that being said, Dad, what is our listeners' Chappell Chunk for the day?
It's a great, the Chappell Chunk. You catch me off guard with that all the time. I should be prepared for this. I think today's Chappell Chunk is pay attention to the data and the information that we're giving you today, especially for the buyers that are in the market to purchase, and then when we've got sellers that are considering possibly listing their house. The information that we're giving you today is extremely important, and it kind of helps set the expectation, not just from us on our standpoint and with our buyers and sellers, but your realtor as well. Whether you use us or someone else, they're going to have some expectations for you as well, and I think they would concur with the information you're going to get today. So I think today's Chappell Chunk is simply listen to the data and the information that we're providing today. I think in the long run, you're going to see how very helpful it's going to be.
Yeah, that's very true. So let's kind of kick things off by talking about some of the general Austin area statistics, and then we'll kind of start moving a little bit more hyper-locally as we progress through the episode and start talking about some of the other statistics. We know that prices absolutely skyrocketed. I mean, what was it? It was like 40-something% was the increase year over year when this market really started taking off, I think is what it was.
Yeah, I mean, and it's I can literally timestamp it, and I know we've talked about this in previous episodes. In fact, we're going to reference two of them here in a little bit. But I think it was in March, probably mid-February, early March, when we can actually timestamp what happened with the market. And at that point is when we saw it just skyrocket, and I was like shocked. In February, March, we may have seen like a 10 or 15% jump, but then turn around in March and April and June, May and June, just off the charts. So we'll see some of that here in just a few minutes. But then towards the end of it, end of this quarter, we started seeing things taper off. And not only did they taper off, we saw the sales volume continue to increase, but we noticed that the prices stabilized, which is good news, bad news. It's an interesting dynamic that we'll discuss in just a few minutes.
Yeah, so let's kind of start things off. Let's talk about July. So, as we said, this is going to be a third quarter housing update. We want to keep it as up to date as possible for you. So in July, the median sales price in the Austin Round Rock MSA area was $480,000, which was still 37% up from last year, at the same time. And then from there, moving into August, we actually saw a little bit of a decrease from 480,000 to a median sales price of 470,000. And you might be thinking, well, Daniel, that's not good, right? The prices went down. What does that mean for me if I bought a house back in July? Well, it's still substantially up from the same time last year. We're still 34% up from last year. So, we mentioned in some of our previous episodes, specifically episode number 13, where we talked about the real estate market outlook that we released. I think that episode came out around March, April. And then we had episode number 25, where we talked about, debunking this whole idea of a housing crash imminent in the Austin area. But basically what we predicted was that you might pay a little bit more for a house than what it's worth in today, absolutely. But that's not to say that you're going to be in negative equity for very long. So, we kind of expected this. So let's talk about that a little bit before we kind of continue on.
Yeah, so what we saw is, some folks were paying what initially seemed, 37% is extremely high over where we were a year ago. Now, with that said, and then, we see the drop of 34%. Well, that's only a 3% drop from month to month, but still, like you said, that is a 34% increase from last year. Now, what does that mean? So people who bought their house when this market was just extremely crazy may have seen a little bit of a dip in their equity position over the past couple of months. But that is a very short-term deal because real estate is still going to appreciate. It's still your best hedge against inflation. So I still recommend to investors all the time. I mean, investors now are looking at Bitcoin or some of these other digital coin things. That's fine. That's a very short-term, very volatile market. Whereas when you take a look at real estate, it's long-term. It's a much more stable market. You may lose a little bit of equity this year at this time. But I think by this time next year, maybe 2 years from now, all that equity will be made up. Because most people are going to stay in their homes longer term anyway. This is not the kind of market where you buy a home and turn right around and sell it. I have seen that over the last year, but that's the anomaly. Most of this is when you purchase a home, whether it's for investment purposes as a rental property or you're purchasing it as your primary home, your goal is to hang on to it long term. And long term, you're still going to see a pretty good appreciation in that real estate property.
Yeah, and let's not forget that the real estate market, just like every other market, is cyclical, right? We have the time of year where there are more buyers in the market as we kind of move into the holiday season and when things, get a little bit colder, kids are back in school, there's a lot less movement going on in the market. So with less buyers means that there's a little bit more inventory available, which means, kind of moving us into the next point is that homes are selling for a little bit closer to list price. There's a little bit less competition. There are still multiple offers on a lot of properties, but it's not anywhere near as drastic as what we were seeing earlier on in the year.
Right. So earlier on in the year, especially price points around the 300 to 400 range, 300 to 400,000 range, there were so many offers coming in. I mean, it was not uncommon. I know we had on our team several where we received over 10 offers. And, when a seller receives that many offers, it makes it difficult to try to determine, okay, which is the best among all of these offers, because there's a lot to consider. There's terms of the contract, then there's the money aspect of it. There's just so many different things that we have to pay attention to. So what we're seeing now is that instead of getting, 10, 15 offers, now we're seeing 2 to 3 offers. Which seems to be more the norm. And the other thing, too, is that homes are sitting on the market a little bit longer. So when we were getting 15 to 20 offers on a home, it would be on the market for 3 or 4 days. Now what we're seeing is homes are sitting on the market for about 2 to 3 weeks, and then all of a sudden we're starting to see multiple offers. But again, that depends too on where that home is at, because there are some areas where they're much more desirable than others. So on those, they're still flying off the shelves, and they're going off on multiple offers too. So it really just depends on the product and where that product is and what the buyer is willing to do for it.
Yeah, definitely. So let's kind of talk about how many homes have sold, right? Because we said sales volume in general hasn't really adjusted that much. There's still a lot of sales happening in the market. It's just a little bit less competitive. So in July, there were about 4,000 homes that sold. that's closed sales. In August, it went down about 200 homes to 3,849, and then in September, it was around 3,700 homes. So it's not that drastic of a difference when you look at the grand scheme of things. I mean, we're still looking at 3,500 plus homes selling every single month in the Austin area.
Right, and one thing to pay attention to is that even though we're seeing a drop in the number of sales, what that to me indicates is the cycle that you were just alluding to. So school started again in September. So what we typically see is September is when we really start seeing the numbers drop off, because by that time most families have moved or have decided, especially with as crazy as this market was, they got frustrated submitting so many offers and they wound up renting. So I'll be interested to see what the rental market did. I mean, I know by some of the folks that I was able to get into rentals this year, and I actually did more rentals this year than I have in the past, just due to the fact that the market was so crazy and people just got frustrated. So what we saw is that the number of sales actually, in my opinion, followed the cycle that we're used to seeing this time of year. So it did slow down just a tad, but again, it's not unusual. That is pretty normal.
Yeah. And let's talk about months of inventory, right? Because that's an important number that we've talked about before, again, on the previous episodes that we mentioned, episode number 13 and number 25. Months of inventory is basically a number that we use to determine, is this a buyer's market? Is this a seller's market? Basically, it's how long will it take all of the homes that are listed on the market to be completely sold out? And, in July, we were looking at 0.9 months of inventory. Well, that's only changed to 1.1 months of inventory. So what does that mean for buyers? What does that mean for sellers?
Not a whole lot. It still is an indicative market. It's a very, very strong seller's market. So seeing that bit of an adjustment to me doesn't mean a whole lot, mainly because, I mean, it's not drastic enough to shift the market. I mean, if we were to see 3 or 4 months inventory, that would be a shift. And at that point, that's when you might see buyers be able to take a little bit more advantage. But I mean, still, that would, even at 3 months inventory, that's a very strong seller's market. Not quite as strong as what we're at right now. But still, it doesn't mean a whole lot other than as a seller, your home is going to sit on the market just a little bit longer than it was before. So usually, it's, before we were selling it the first weekend. Now it may take us a couple or 3 weekends, which is still, in the grand scheme of things, is not long at all. I mean, it takes no time to sell a house when it's priced right.
Yeah, and I mean, right now, the average days on the market is only 17 days. So when you're still talking about that, like you said, 2 to 3 weeks, I mean, it's not taking long to sell homes. And to kind of give a little bit of perspective, right, less than 3 months of inventory is what they consider to be a seller's market. 3 to 6 months of inventory is a neutral market, and 6+ months of inventory is where it becomes a buyer's market. 6+ months of inventory is where you start to see the buyers get a little bit more control, and we're still very, very far out from that. So that kind of leads me to the idea of this whole housing bubble, right? We've talked about this in previous episodes. We still continue to get questions about this. Is there a housing bubble? And the simple answer is no, there's not.
I agree, there is not.
I think we can kind of take it a little bit more locally so that, people that are living in the Austin area, at this point, you might be thinking, okay, so I bought a house in Williamson County or in Hayes County or in Bastrop County. So, what do these numbers mean for me? So let's kind of take it a little bit down to a little bit more of a local level. So let's start with Bastrop County. Bastrop County in the month of July, the median sales price was $345,000. In August, that went from $345 to $334. And from August to September, we actually saw a little bit of an increase. It went from $334 to $335,000. So again, we've talked about it being a pretty stable market at this point. And I think this kind of alludes to that is we're still up a lot from last year. When you consider the average rate of appreciation before the market took off, I think was somewhere around 6 to 8%, right, on average across the board.
Well, that's a good question. It depends on where that home was at. So even in Williamson County, for example, I know on the east side of Williamson County, appreciation rates tended to trend somewhere around 6 to 8% year over the past 3 years. On the west side of Georgetown, depending on where that property was located, it was typically between 8 and 12%. So same when you're talking about Bastrop County and some of these other smaller counties. These counties are outlying, and Bastrop is becoming quite popular because it's east of Austin, and the drive to get into Austin, traffic still hasn't quite caught up to it yet. And I think there's been some infrastructure out there that's kind of helped that along the way. There's still a lot of construction happening out in Bastrop. So we're starting to see Bastrop and Bastrop County grow a little bit. To the point now that, they're actually showing up on our statistics, when in the past they wouldn't. Who would be talking about Bastrop, for crying out loud? But now they're part of the conversation, which I find very interesting. You've got Manor out that way, and Elgin, and Bastrop. So all of these little areas that border or touch into Bastrop County is where we're seeing the most growth. And Bastrop County literally is one county adjacent to Travis County on the east side. So very interesting statistic there.
Yeah, and to that point, right? Caldwell County is another one that was I remember Caldwell County being the place that you didn't want to get pulled over in. You pay attention when you drive through that county. It's a very small county. There's not a whole lot going out there. But now, like you said, they've become on the map. There's a lot more activity happening out there. It's one of the more affordable places to live, and it's still not that bad of a commute, I guess, if you're working in the Austin area and looking for an affordable place to live. So the median sales price there in the month of July was $249,250, and then we saw a huge spike in the month of August. Now, mind you, like I said, Caldwell County is very small, so the number of sales that are happening in that county are very low, 25 sales a month. So that average sales price, there's a lot of factors that could go into it. Maybe a large piece of land was sold. Maybe there's a ranch or, a really nice house with a lot of land that was sold that kind of threw these numbers a little bit. But $249,000 in July, up to $321,000 in August. And then in September, dipped back down to $259,000, but with 34 closed sales. So the number of sales was a little bit more. And it's still continuing to rise, right? And it's 19% up from the same number of, the median sales price from last year. So, what does that mean? So
that's a great question, and I love talking about stats. So, stats to me are one of the things where, as an expert in this field, you start digging into stats and trying to figure out, okay, what does that really mean? And Daniel, you touched on this already. Because there are so few homes sold in Bastrop County, or Caldwell County, one sale can dramatically affect these numbers. One sale, maybe two, can dramatically affect that. But then when you have the higher volume of sales, especially when it averages out to 259, what that tells me is that there was probably some newer construction that finished out, and they were able to actually close on those deals, whereas they were unable to close on them previously. And again, this is just my speculation, but because that number stabilized at 259, you have a higher number of sales. It tells me that most of the homes at the average price point were probably pretty close to that, most likely new home construction.
So it's no surprise to me to see that the city of Austin was one of the ones that saw the most drastic decrease in median sales price over the last quarter. And I think that's just simply because we know that the city of Austin, right, that's where downtown is at. That's where a lot of our more affluent neighborhoods are. So the median sales price in Austin in July was $574,975. So basically, let's call it $575. In August, it dipped down from $575 to $540,000, and then for the month of September, it dipped even further to $525,000. So we're talking a $50,000 difference in the median sales price, it decreasing over the last quarter. So what does that number mean to you, Dad?
That's a good question. How many sales do we have in those months?
So in July, there were 1,300 sales. In August, 1,245 sales. And then in September, 1,156.
So what we're seeing then is a price decrease. At the same time, we're also seeing a number of sales decreases. So, that's a good one. I'm not real sure what to make of that. I really don't know, because that's a unique pattern. It's not something that we've seen before.
Yeah, well, I think a big part of it is, Austin inherently has a little bit more value because of its proximity. So I think maybe we saw, buyers throw a lot more money at homes in that area, And I mean, don't get me wrong, we're still up 28% year over year when you talk about how much the median sales price has increased over the last year. But when you talk about, I'd be interested to actually see what it was in March and April. I wouldn't be surprised to know if it was well above 600,000. And now you're starting to see things kind of taper off a little bit. I would probably say it's just simply because Austin inherently has a little bit more value because of its proximity to everything that Austin has to offer, right? It is the core of everything that everybody who's moving to these areas and is buying homes in Williamson County and Bastrop County, Hayes County, all these surrounding areas are really buying homes here so they can be closer to Austin.
Yeah, but I also think, too, one of the things to pay attention to is the size of these particular homes. So a lot of these homes are not single-family residents. A lot of them are condominiums. And the condominiums in Austin are extremely expensive. There's many of them that are $1 million or more. But then you have some of the other older homes, and I know all around Austin neighborhoods, some of these older homes that were built in the 40s, 50s, and 60s, I mean, they're such dilapidated homes, it's not even funny, and their home values are still in the 500 to 600 range. And then, people buy them, they come in, they remodel them, and then turn around and sell them for $1 million. I've seen that a number of times. Yeah. So I don't really know what to attribute that to without having paid specific attention to the city of Austin. I do my best to stay out of there. That's not, we left Houston. I don't like the traffic. It's just that simple. But one of the other trends that I've noticed, and I don't know if this may have an effect on that or not, but we're seeing crime rates at some of the larger cities jump. And I wonder, too, if that doesn't have an impact on these home values as well. Because the city of Austin went through this defunding law enforcement and reshifting their funds to do something else. And then just recently they had an election where they voted not to provide more money for cadet classes and things like that for the police department. So I'm wondering if that also doesn't have some sort of an impact on the real estate market itself. I would venture to say that it does to a certain degree, but that dramatic of effect, I honestly don't know. But I do know that, the crime rates have gone through the roof in the city of Austin, whereas some of these outer-lying counties and cities have not seen that same trend. So I'd be curious to know if we can attribute some of that to that. I really don't know.
Yeah, I'm sure there's a lot of factors that play into it. I think that is definitely one of them.
I think another thing, too, is that the buyer's mindset where they're just sick and tired of having to go into multiple offer situations and pay so much over listing price to where now homes sat on the market a little bit longer during that same time period, and sellers decided to start lowering the price. That could be another driving factor as well. So it's a combination of factors. It's not just one thing.
Yeah, that's a good point, too, because we were seeing, in the early months of this, in March, April, May, June, homes that were going 100. I think we even heard cases of 150, almost $200,000 over list price. And that was people coming in and just throwing money blindly because you don't know what the competing offers are. So, I think the fact that there's fewer offers happening on the homes, that definitely plays a big factor. Things are selling closer to list price, and those $150,000, $200,000 over list prices, they weren't super common. They were more anomalies, but they still happened. And I think in the market, the way that it's, just the natural movement of the market, as we've already talked about, there's just fewer people putting offers in on homes, which then, means they're selling closer to their actual list price. And not just that, but now we have several months worth of data of what homes are truly worth, right? So, somebody out there paid $200,000 over for a house that should have sold for maybe $100,000 less, maybe even $125,000 less. And they might be kicking themselves right now.
It could be, yeah. And that may be attributed to that too. I mean, it's very difficult to tell because those statistics there are not what we're used to seeing either. So again, I want our listeners to understand that we're sitting here spitballing while we're looking at these, trying to determine, okay, what would cause that based on our experience. So, if somebody else has got something on that, by all means, please reach out to us and let us know. I'd be interested to hear somebody else's take on that.
Yeah, absolutely. So let's talk about Hayes County. So I sold my house in Hayes County back in, I believe we closed in May. I was shocked absolutely shocked with how much we sold that house for. I don't remember what episode it was, but we talked about that sale a couple of times in a few different episodes. But we listed that originally for $245,000, got 17 offers on it. And then the buyer was unable to get financing and backed out on the day of closing. So we had to go back to market. We went back to market, I think, at 285 because that was much closer to where all of the, the offer spread that we got the first time was. And then it ended up selling for $335,000. And that wasn't the highest offer. So yeah, we had another offer that was at $345,000. So, in the month of July, the median sales price in Hays County, this is baffling to me because when I bought my house there in 2015, there wasn't a single house in the city of Kyle that was over $300,000. We didn't have what they would call a premier neighborhood. It was 100% starter homes, just, everything close to around $150,000 to $200,000 was every house in that city. And now the median sales price in in July was $392,000. And then in August, it went up to $399,000. And now we're seeing it stabilize a little bit more at $365,000 for the month of September. So, that to me that one hits close to home just because it blows my mind to see how much that little area that I spent 6.5 years in just has grown.
Well, it's not only grown. I mean, I'm looking at the numbers of the sales, the closed homes, and even that is much higher than what I would think. Hays County is not a very populous county. So, with it being such a smaller county and having that kind of a populace, that's quite shocking to see that number of sales. But remember, too, Hays County is immediately south of Austin. So, it's an adjacent county, and it's where homes are much more affordable. So when people are comparing a $565,000 home in Travis County or in the city limits of Austin, and then they can turn around and get a $365,000 home in Hays County that is very comparable. Yeah. Think about that for a second. That's $200,000 difference. I think I'd traverse that traffic. But with COVID too, that's another thing that we haven't even talked about. Because of COVID, more people are working remotely, so they didn't have to drive in. Yeah. Which is also forcing people to move out into much more affordable areas, including Hays County, Caldwell County, Bell County. It's Bastrop County. So all of those surrounding counties are actually attracting a lot more people because they can work remotely. They don't have to drive in.
Yeah, and you know what? Like I had friends of mine that, bought houses in Round Rock or that were, living in other areas around the Austin area. And I remember they used to think I was crazy for living in Hays County and for driving all the way up. I used to manage an AT&T store that was, 45 minutes northwest of me. And people thought I was crazy, but I'll be honest with you, that commute was not bad. I knew people that lived much closer to Austin that would take much longer to get to work than, I'd be driving 45 miles in 45 minutes, just driving the outskirts of Austin, taking some of the outer highways, and I was able to get around pretty easily. I could get from my front door into downtown in about 30 to 35 minutes. I know y'all would have loved to have that kind of a commute when we were living in Houston.
Oh, God, yes.
So, when you put it in perspective, especially having grown up in a place like Houston where, there's over 6 million people, the traffic is literally bumper to bumper, and you've got 7-lane wide highways. For me, that 30, 35 minutes, 40 minutes, I wasn't complaining, and people thought I was crazy, but now people understand.
Yeah. And that's the thing too. People are now, because of affordability, can move out. And again, being able to work remotely, I think, has been a game changer.
Yeah, definitely. So Travis County in the month of July, we saw $551,000 as the median sales price. In August, $527,000. And then in September, down to $510,000. And again, with the number of closed sales, it's not too drastic of a difference. We're talking 1,950 closed sales in July, 1,935 in August, and then a little bit more of a dip to about 1,800 in September.
So Travis County is actually following the same trend as what the city of Austin is. And remember, the city of Austin is the largest populated city within Travis County. So those numbers literally mirror each other. So again, I think the same things that applied to Austin city limits also apply to Travis County. which I find very interesting, but I'm not really surprised either. But another thing that we didn't mention is that these trends actually follow what we're used to seeing in real estate. So during, the peak spring and summer months, right at the beginning of summer, that is our peak time where we sell the most homes. And then you take a look at the traditional bell curve. It's the highest during those months. And then it starts to taper off in August to September. So that's what we're seeing here. July was the highest, August a little lower, September even lower still. That is the actual bell curve that we're used to seeing. Now, with that said, these prices still, the bell curve is not as sharp of a peak as it used to be. That peak has flattened a little bit, so that now we're starting to see a more traditional bell curve versus the extreme high peaks in those summer months. So I still think that's pretty indicative. This is more of a normal pattern of what we're used to seeing.
Yeah, I think you're absolutely right. And then that brings us to the last county that we're going to talk about, and that's Williamson County. And this is our backyard. This is where we live. So in Williamson County, we saw in July a median sales price of $445,000. In August, down to $441,000, and then for September, $435,000. So I think of all of the counties, this north part of Austin has been the most stable and consistent.
Exactly. And, we did see a decrease in that, in the prices and everything, but the decrease percentage-wise was much smaller than the other areas. And then when we look at the number of closed homes, it actually mirrors Travis County, very, very similar. So we're seeing the percentage a little bit smaller, meaning I think the market is a little bit more stable as far as pricing is concerned in Williamson County than in Travis County. So in Travis County, we saw more of a dramatic shift in prices, whereas in Williamson County, it stayed pretty stable, although there was a slight dip. And that's what I have been seeing, in the market here recently, is that yes, prices jumped, but then they stabilized and they started to go down just a tad. And the reason they're going down just a tad is sellers really want to get their home off the market, and they saw how quickly they could sell it in the beginning. They put it on the market for a couple of weeks, then they go ahead and they lower the price. And that's not a normal trend. I mean, before COVID hit and before this crazy market this year, typically we would give a home 30 days on the market before we would consider a price adjustment. Whereas now, with as fast as the market is moving, typically if you don't have an offer, a good solid offer in the first 2 weeks, then you might entertain the fact that the house might be priced a little high. So we're having that conversation much sooner with our sellers than we were in the past. And I think that is a clear indicator of what's happened in Williamson County.
Yeah, I think you're absolutely right.
So what we can do now, Daniel, is what I'd like to do is provide a little bit more information to our buyers and our sellers. So to kind of segue into that, I'd like to kind of set the expectation for both buyers and sellers. So what I mean by that is when we talk to our buyers, we have what we call an intake interview. And during that intake interview, we are not only trying to find out what kind of a home that these folks are looking for and trying to figure out their financing and things like that, but we are also setting expectations for them on what to expect with our market trends, how to submit an offer, what those offers need to look like in order to get the house and things like that. So I've come up with a couple of things that I think are pretty important, and this is where I think our buyers and sellers really need to pay attention.
Yeah, definitely. So let's start with the seller expectations. So I think that's a pretty simple segue since we're talking about sales prices and all that stuff. So let's talk about what our sellers need to expect in this market today.
So first of all, it is still a very, very strong seller's market. So, but sellers need to take that with a grain of salt. Just because it's a strong seller's market doesn't mean it's a strong enough seller's market where you can take advantage of the buyer. What I mean by that is there are certain things that you'll be able to take advantage of. However, if you think you're going to be able to sell your house for $200,000 more than what you bought it for last year, that may not be the case. So you have to be realistic in what the market says your home is worth. And believe me, we're going to find that out very quickly. So Daniel and I and everybody on our team and most real estate agents, the true professionals, are very good about helping a seller determine what their house is worth in today's market. And we do that by looking at historical data. And we don't have to go that far back. Now, used to we'd go back as far as 6 months. Now we can go back as far as 90 days because our market has shifted so drastically. And within that 90-day period, we can tell very quickly what a home should be worth in today's market. So with that, it's such a strong market due to a high demand and low inventory. So we still have that difficulty of getting inventory. People just aren't willing to sell their homes for a number of reasons. So one of the other things to pay attention to as well is the low interest rates. So that's also driving such a high demand. It's not just a high demand on resale prices on resale homes, but it's also high demand on refinancing. So what that has done is it's created a delay in appraisals. It's also possibly created a delay in closings due to the high volume of loan applications that mortgage lenders are receiving. That this time of year kind of slows down a little bit, but we've also seen an uptick in interest rates. Now, not a dramatic uptick, but just enough to slow down the refis. So, which is very interesting to me, because now that we've seen a slowdown in refis, that means that the appraisers now can concentrate more on home sales versus refi, because all of those homes, if there's a loan depending on it, I'd say probably 90% of them still have to be appraised. So that puts a tremendous workload on the appraisers, which slows down the appraisal market and could sometimes affect a closing date. So those are kind of just a couple of things.
So let's say I've made the decision now that I want to sell. What do I need to worry about then?
So, well, you don't really need to worry about a whole lot, but there are some things to pay attention to. First of all, you want to price the house the way it should be priced by today's standards, by today's market. And, I hear a lot of times sellers say, well, my neighbor sold their house for X amount of dollars. And what we find when we actually do the digging is that the neighbor wasn't telling the whole truth. The neighbor may have sold the house, but they didn't sell it for what they told you they sold it for. So the other thing, too, is that, a lot of folks compare their house to their neighbor's house, and it might not be a true comp. A true comp will be something that is within, and when I say comp, I mean comparable. A true comparable will be something somewhere in the neighborhood of 300 square feet, give or take, of the current home. It will also be similar in age. So those are two very important factors to keep in mind. So if you've got a home that's 3,000 square feet and you're trying to sell it, and then your neighbor's house is a 3,500 square foot home, those might not be very good comps. So it may need to be a little bit smaller to be able to do a good comp on it. So just kind of keep those kind of things in mind. And the agent that you're working with knows what the house is worth. But again, you're not really going to know what the house is worth until you put it on the market and you get the house under contract, because a house truly is only worth what a buyer is willing to pay for it. So as the real estate professional, we will help the seller determine what the price is that it needs to be set at. And ultimately, it's up to the seller to set that price. So hopefully the seller will listen to us and set it at what the market says that it needs to be set at, and not just some arbitrary number that they come up with.
Yeah, and I think another thing that kind of plays into the whole comp thing is, I live in a neighborhood where we've got trails, we've got green belts, we've got all kinds of things that run throughout the course of the neighborhood. And, I could be living in a house on this side of the street and have a neighbor. I mean, like right now I'm looking at 3 different houses just in my backyard. But across the street, the neighbor may have a green belt in the backyard, or they may have access to more trees or better landscaping, or, all of these improvements that they could have made to the land or the house itself. So, the neighborhood that I'm in is also, 40, 50 years old. So we've got homes now that are being renovated, that are being completely gutted and rebuilt and remodeled. There are certain things that you don't know until you know, right? So that's why us as professionals, one of the things that we look into is, what are some of the unique factors that each individual home has to offer that may have made it sell for more or less than the house next door.
That's right. That's absolutely right. Okay, so sellers also need to make sure that buyers understand what their needs and wants are. For example, if a lot of sellers now are putting their homes on the market after they're under contract for a new home. So they're not real sure when the new home will be complete, but they also know they need to sell their current home in order to use those funds to purchase the next home. So sometimes the seller may need a leaseback. So typically what that means is they need the funds from this home to purchase the second home, so they need to sell it, but they don't have any other place to go in the interim. And it may take them another month or 2 months to get into the next home. And remember, with today, there are so many construction delays based on so many different reasons. So construction delays can come without notice. So sometimes buyers or sellers may need a leaseback. So it's important to let the agent know that these are the kinds of things that you need to work out so that when the offers start coming in, then the agent can better filter through those. And those kinds of things actually help a seller determine which offer they're going to go with, because it's not always about the money. Sometimes it's about some of the terms in the contract that can actually help the seller. So that's very important to keep in mind. And of course, if the seller doesn't let their agent know that, then the agent can't prepare for that, and actually help the client achieve what their real goal is.
Yeah, absolutely. So that's a perfect segue into some of the buyer expectations, right? Because we saw over the course of the last several months that buyers had to be really, really creative on how they submitted their offers, what terms they were offering, and some of the things that they had to do for the sellers to to be able to make their offers look stronger. And like you said, it's not always about the numbers. Sometimes it's about the leasebacks, and there's so many different factors that can go into it. So what are some of the things that buyers are having to do nowadays to ensure that their offers are being taken seriously and are being moved closer to the top of the pile in contention with the others?
Great question. So the first thing obviously is price. So if the house is priced right, then the buyer might consider going at a full price offer. Maybe going a little above, depending if there's multiple offers. And I have this conversation with the buyers all the time. And after me running the numbers, I say the house appears to be priced very well, or maybe it's priced a little bit high based on the other comps. And then I give them a number to work with. And, a lot of times it'll be either right at or just below the listing price. So then I have to take a look at, okay, if it's right at or above or below the listing price, how recent was that last sale? Because the market still is fluctuating somewhat. So depending on when that last sale was, if it was 60 days ago, then there's a possibility that it could be worth a little bit more than what the listing price is. So there's other little factors to play in. But then the other thing too is if there's multiple offers, what are we going to do to make as a buyer's offer stand out amongst some of the others? So one of the things that as a buyer's agent that I do all the time is I'll ask the listing agent, what does the seller need? So you'd be surprised what that question actually brings. I've heard things of, well, they need to close after a specific date. And the reason they need to close after a specific date is because maybe they've bought the home and then they're having to sell it within 2 years, and that specific date breaches the 2 year. The 2 years is important because the buyer may not want to pay, or the seller rather, may not want to pay capital gains tax. But if they sell it within 2 years, then they're subject to capital gains. So they may have to wait for a specific date. That's important to know. Maybe they're like the discussion we had just a minute ago where the seller is moving into a new home. Or maybe they've got another home that they're moving into that they can't close on because that seller has something going on. So there could be a trickle effect from that. So it's very important to learn what those things are. And if the buyer is able to accommodate those needs, then those are kinds of things to think about. Another thing, and this actually happened recently on a deal that I worked on, a listing that I had, where we received multiple offers, and one of the offers, the buyer was only going to offer a lease back for was only going to give like a 2 or 3 day free lease back and then charge the monthly rate for whatever that is going to be because it was an investor over the next, couple of months. Well, the seller had to stay in the house for a couple of months because their house isn't going to be completed until mid-December. So because the holidays and everything like that and giving movers, they can't get everything scheduled until mid-January. So they need to stay in that house until mid-January. Well, if they're going to have to pay market value for what that is, that's something to keep in mind. So that was one of the things that they needed to do. Well, then we get a second offer in, and in the second offer, the rent that they're going to charge was dramatically lower, and they were offering a free lease back for the first 6 weeks because there's no payment that's due for the first 6 weeks. So they were able to offer that, and then when that period ended, then the rent that they're going to have to pay is dramatically lower. Well, that was very attractive to the seller. Not only that, the price that they came in at was a little bit higher than list price, whereas the other seller was at list price. So sometimes it is about the details in the terms of the contracts that are much more attractive than just a dollar amount.
Yeah, absolutely. And that's something that we had to consider when we were working in the market too. I mean, we just purchased this home back in July, and that was something we had to consider. I think we put offers in on 4 or 5 other homes before we found this one. So we offered free leasebacks for a couple of the other offers we had put in. And you sometimes you have to take into consideration, right? There's a human aspect to this, and I think a lot of people forget that. We have to be cognizant of what the other person needs and wants, and take that into account, because at the end of the day, right, if you're putting an offer in on a home, it's because you want that home. So, if you want that, it behooves you to take into consideration what the person on the other side is looking for, and what benefits them, so that you can make a win-win situation. I think that's actually one of the things that's mentioned in some of the books that we've read and about negotiations is it's not about a win for me and a lose for you. It's really about how can we come up with a win-win situation so that everybody gets what they want and need out of the situation.
That's exactly right. And, a lot of times too, Stephen Covey was infamous for saying, begin with the end in mind. And in real estate negotiations, that truly is part of what we do. We understand what the end goal is, and it's a matter of being able to get the buyer and the seller to agree to something at a table and have what we call a meeting of the minds. And once that has been achieved, then both sides typically are happy about the outcome, or should be. And that's our ultimate goal in all of that. Okay, so as far as the deadlines are very important for both the buyer and the seller. So as a listing agent, once we start receiving offers from several buyers, then I have the discussion with the seller. Okay, we may want to set a deadline. So if the offers start coming in on a Friday, typically we want that deadline to be set for late Sunday or maybe early Monday morning. And the reason being is, some folks have already scheduled appointments to go and view the house. We want to give those buyers a chance to see the house. Even though we have offers in hand, unless there's an offer that comes in is just so dramatic that it behooves the seller to go ahead and take it off the market. Most of the time, we want to let that run through the weekend. So typically, a deadline will be discussed about when to set that deadline. And as a buyer, when the deadlines are set, what that means is, as the buyer, you need to come in with your biggest and best offer. So what that means is not only your highest price, but what other things can you do to make your offer most attractive? And again, when you have multiple offers, you really don't know what anybody else is offering. So it's a roll of the dice trying to figure out, okay, how am I going to actually make this work? And what's going to be good for us and good for the seller as well. So those kind of discussions are frequent, and you have to decide as the buyer if you want to be engaged in something like that. And then sometimes I've seen where the buyer actually tries to take advantage and try to shift things in their favor by putting a deadline themselves. So they'll submit an offer saying, okay, we need an answer by midnight tonight, or if it's early enough in the day, or we need an answer within 24 hours. And if we don't, then our offer is considered off the table. Well, that's good as long as the offer is what the seller is anticipating. Now, if it's a full price offer and the seller declines, well, that may mean that the seller has something else that is better than that offer to begin with. And it may be that they just want to test the market. So you just never know. Some sellers, remember, a seller can accept an offer, decline an offer, or reject it, or counter an offer. And a counter is still a rejection of the original offer. But guess what? The seller doesn't have to answer those offers anyway. So even though as a buyer you set a deadline saying, I need to have an answer by X time tomorrow, you may not really be gaining the advantage that you're looking to gain. And instead, the seller may look at it as an ultimatum. And if an ultimatum is given to a seller, especially considering today's market, they may not entertain that offer at all. They may just completely blow it off and go with the second or subsequent offers after that. So sometimes that it can be good or it can be bad. It's a double-edged sword.
Yeah, and that's actually one of the strategies that we tried to use on one of the houses that we had made an offer on back in July, and we ended up leaving our offer in the ring because we from the listing agent's perspective, she said, you're one of the highest offers, but the seller still has a lot of activity that's happening, and it would be best if you're really interested in this house to keep your offer in the ring. And, we decided to keep it in the ring. And actually, we've talked about this before in one of the last episodes. We didn't end up getting that house, but they came back to us and wanted us to go ahead and move forward with it, but we had already found our dream home. So, it was one of those things where we thought, from the initial get-go that the offer was strong enough that it would be worth them going ahead to accept it. And so we put that deadline in it. And again, it's the seller's market. The seller has the advantage here. So
That's right. And I have seen others where the buyer actually withdraws their offer and they don't go forward with it. So it just depends. And, sometimes I think that's a wise strategy as well. You set a deadline and then you get serious about it. Because what does happen oftentimes is that the seller will hang on to that offer and then, of course, will tell the listing agent, okay, this is the kind of stuff that I want you to release. Or that you can release. These are the kinds of things that I don't want you to release. So at that point, once there's an offer on the table, as long as that offer has not been withdrawn, then me as the listing agent, when I'm talking to other buyer's agents, when they call up, yes, I do have an offer in hand. I have presented the offer, or we're under negotiations, or we have the offer in hand, they're waiting for additional offers, whatever that story may be. And then sometimes the seller doesn't want to disclose any of that. So they may tell us, don't tell them we have an offer in hand. That's none of their business just yet. So it just depends on what the seller wants to tell us. I know for me as a listing agent, I prefer to release at least, yes, I do have an offer in hand, because I think it really does help me get a higher offer for the seller versus just being quiet about it. So I prefer to tell them. And then when the buyer or the buyer's agent is asking, well, is it at full list price? I want to be able to tell them yes or no, or give them an idea of where it's at. But I need the seller's permission to do that. I can't just arbitrarily go out there and do that. So remember that. If your buyer's agent is coming back and telling you, this is what they're allowed to tell me, this is what they're not allowed to tell me, it's because it's based on what the seller is telling the listing agent. So it's not just the listing agent making this stuff up and doing things arbitrarily. That is coming from the seller. It is their house and it's their decision.
Yeah, and you and I are on the same page about that. When we were working with our sellers, we advise them to allow us to give at least some information. And I think in a market right now where it's so difficult for buyers to be able to get homes, it really does help the buyers and the listing agents know where they need to be so that they can have a better chance of getting the opportunity to get that home. So, it benefits the seller, it benefits the buyer. Obviously, if it's in multiple offers, it's only going to benefit one of the buyers. But if you keep it fair across the board, you let all of the agents know, you're giving them a better opportunity to be able to get the home. You're getting your seller the highest and best price. And again, that creates the win-win scenario that you're looking for.
Yeah, and the other thing, too, is that when that happens, and I've heard this so many times from the buyer's agents, they really appreciate having that information. So if the seller is willing to allow us to do that, we can do our job better for them, I think. But at the same time, too, the buyer's agents really do love it. And it also helps us filter through some of the offers that we know are not going to be competitive. So at least a buyer has an opportunity to think, okay, so if they've already gone to this amount, that's beyond where we wanted to spend. So then they don't waste their time submitting an offer. So it helps us get only the serious offers on the table and not just a whole bunch that we have to kind of weed through. So it's a win-win for a lot of folks to give at least some information. We don't want to release all of it, but we do want to release some of it. I think it's very beneficial.
Yeah, absolutely. Well, is there anything else that we wanted to cover for our listeners today? I know it's been a lot of information that we're throwing at you, but do we have any kind of closing thoughts?
Yeah, absolutely, I do. I know this is going to come as a shocker. Referrals. We like the referrals. And again, this week I have yet another story where I had somebody reach out to me that was looking for a trucking company to ship a vehicle, of all things, out of country. So I was able to find some folks and put them in touch and let them get that taken care of. So yeah, absolutely. So referrals are where it's at. Reach out to us. We're happy to help you out.
Absolutely. So thank you, listeners, so much for tuning into the show. Hopefully this was a pretty informational episode for you. Again, we released some statistics for you. We talked about a lot of the different Austin and surrounding areas and the counties and what's happening in the market. This is really good information for you to have if you're considering moving to the Austin area, if you're considering buying or selling in the Austin area. definitely listen to this episode all the way through. We've got nuggets for buyers, sellers, investors, and everyone alike. So thank you again for taking this time with us. We appreciate it. And don't forget to leave us a review, leave your comments. We'd love to hear from you and hear what you need to know about next. So thank you. We'll see you guys in a couple of weeks. And this is the Chappell Realty Group signing off.
Thank you for joining us this week on the Chappell Real Estate Show. If you enjoyed this episode, share it with a friend and leave us a review. Find us on social media at Chappell Realty Group and online at chappellrealtygroup.com. Until next time.